morning, everyone. Good morning from the US. Good morning, people who joined us in Europe, and good evening or good afternoon for those who joined us in Europe, and good evening from those who are joining us from Middle East or Asia. And this is a great webinar. I really look forward to discussing with Joe. Joe joined us today. He is based in Minneapolis, but today he's from Paris because there's the air show in Paris. And Joe McConnell joined Castlelake in 2007. So you can think of him as having close to 2 decades of investing in the aviation industry, aviation sector. He's seen different cycles, so we're going to be discussing this. And recently he was promoted as a co-chief investment officer of Castlelake. So he looks after all the strategies within Castlelake, but also very close to the aviation sector and aviation strategy. Very pleased to have you with us, Joe, and I'm sure we're going to have a fun conversation today.
Thank you, Naji. Happy to be here, and thank you, everybody, for joining.
Just to let people know, this is a Petiole/TFO webinar. For those of you who joined us recently, the family office is a multifamily office based in the GCC with offices today in Bahrain, in Riyadh, in Dubai, and really catering to ultra high net worth, affluent investors who are looking to invest internationally. As for Petiole, we are based in Zurich. We have an office in New York and an office in Hong Kong, and we are responsible for the investment strategy in terms of private markets, predominantly private equity, real estate, and private debt. And at times we look at dislocation, thematic plays, and this is one of those strategy that have been a theme for us for many, many years. So Joe, let's frame the discussion across maybe 5 main topics. The ecosystem. So first, maybe we can talk about the demand side. Then we go to the supply side. We talk about financing, the macro environment, and lastly, how you guys put it all together. So starting maybe with the demand side, I was looking at some statistics that we have around 300 million people are going to fly this summer. I think this traveling experience is becoming higher and higher, 20% higher than last year, and even last year was higher than the year before. And when we were discussing back in 2020 about a recovery of passengers, I remember you telling me, look, there are 3 ways we think about it. Phase 1 is more of a domestic recovery. Phase 2 is more inter-regional recovery. And phase 3 is an international recovery of passenger. So the question for you is, when you look at these numbers and going back and reflecting post-COVID, are you surprised with this type of recovery that we have seen, or this is much more in line with your expectation as we speak today?
Yeah, that's a great question, and thanks again, everybody, for your time today. Aviation is a core focus at Castlelake. We've spent about 18 years investing in this asset class, and so we've experienced a number of cycles. In fact, our firm founders have been investing in aviation for over 30 years. But if you take a step back, there's a lot of data in this industry. And over the last 70 years, passenger traffic on a global basis has grown at 1.5 times GDP. And that trend line is rather consistent. And the world is a volatile place. Aviation can be volatile. Airline profitability is absolutely volatile. But what we love about investing in aviation is that the supply and demand of these assets are actually pretty steady and predictable. And on the demand side, just focusing there, a lot of that is due to the fact that people are continuing to take to the skies more and more every single year. The emerging market middle class and the amount of growth that we've seen in the emerging markets in particular over the last 25 years. That trend line in terms of passenger traffic growing over 70 years at 1.5 times GDP is rather steady. And that's through a lot of different volatility. You've experienced obviously a number of wars, 9/11, the global financial crisis, and more recently the pandemic, followed by another war. And so sitting here today, am I surprised that we're back to the trend line? Not particularly, although back in 2020, I think we were all very concerned about what was going to play out over the next few years. And the pandemic was the worst crisis that this industry had ever experienced. And I think for everybody, it was a little frightening. Nobody had ever been through this before. 90% of aircraft were grounded within a period of 30 days. And nobody was really flying anywhere. And then you had a war break out where over 500 aircraft were confiscated. And yet through all of that, the industry has largely recovered. Airlines are profitable again, with IATA forecasting profitability this year at the airline level of $10 billion. And demand for aircraft is back. And in fact, we'll get into supply later, but aircraft are undersupplied today because so much demand has come back quicker than the OEMs can meet.
So when we look at today's demand and the recovery of passenger flying, what is the percentage? Are we above 2019 level? Are we still below? Just give us some data points here, please.
Yeah, it depends on the region. In North America, the summer travel is expected to exceed 2019 levels. In Europe, it's getting very close to exceeding 2019 levels. In Asia, if you exclude China, we're getting very close back to 2019 levels. In China, obviously, there was more of a lag there. And so China is rapidly recovering now. And when China comes online fully, which is about 75 million passengers on an annual basis just coming out of China, we think what you're going to see in Asia and flow through to the rest of the world is you'll be back to 2019 levels. What's interesting, though, is the only thing holding back more demand right now is supply. Aircraft are undersupplied. And we believe that if you were able to provide a lot more aircraft today, demand in terms of passenger traffic would be a lot higher than 2019. And so the net effect of this undersupply is that pricing is a lot higher. Airfares on a global basis are up 30 to 40%. So revenues for this industry on a global basis are very close to getting back to 2019 levels, despite RPKs or passenger traffic still being down 10 to 15% on a global basis. So the airlines are enjoying a healthy revenue environment. And oil prices have started to come down, which is a benefit to those airlines.
Okay, so demand is strong, in line. I mean, it has been a pent-up demand, but when we look into the long term, conclusion is that it is in line with trend line that you foresee relative to GDP growth, and that is continuing to be the case. On the supply side, I mean, you're in the midst of the 54th edition of the Paris Air Show. It's been 100 years they do this show, and I think it's the first time, Joe, that they do it physically post-COVID. So it's been 4 years that people haven't been physically. Tell us, how is the mood over there? I'm sure you're interacting with many of the players in the industry. So how is the mood? And yesterday we saw the news of Indigo, which is a record order book of 500 A320 Neojets. So tell us a bit more about the mood over there, and really, how do you think about the supply? I understand there is this discrepancy between the demand exceeding the supply available today, but curious to know your thoughts on that.
Yeah, everybody's excited to be back. It's great to have a Paris Air Show again. People in this industry love to travel and see each other. That's what aviation is all about. And it's great that we're able to do that again, to reconnect with many of our colleagues and partners in this industry. But I think it's really important when you're involved in this industry to never become too optimistic. We've seen many others in the past at times like this get a little bit too aggressive and forget that this industry can be volatile. And so at times like this, as well as pretty much any time, you need to remain grounded in your core underwriting standards of creating aircraft cheaply and contracting a lot of cash flow from good airlines, as it's impossible to predict when the next cycle will turn. And so, yes, everybody's excited, but at Castlelake, we're remaining excited, but at the same time, conservative in the underwriting. And it's really important to do that, particularly right now, is you never know what's going to happen next, given that the global economy is fragile, interest rates are elevated, airlines are enjoying a really stable macro, aircraft are undersupplied, but that could change. And so you just need to make sure that you remain grounded in all of the data that we've collected over 18 years.
So give us like in practice today, if Indigo orders 500 A320, when are they become available? And what does this mean in terms of practicality on the ground?
Yeah, the Indigo order is really interesting. Ryanair just did the same thing a few weeks ago by ordering, I believe, 500 aircraft as well. Historically, Ryanair and Indigo are two of the lowest cost, most well-run airlines in the world. And they use their scale to their advantage in ordering aircraft, typically at points in time when the macro isn't as favorable. And they're able to use that scale to drive down purchase price of aircraft as they're low-cost carriers and every dollar counts. What we're seeing today, although they haven't come out and said it, I believe is a lot different. They're buying aircraft today because they see growth, they see consolidation, they see an ability to take advantage of that growth by securing aircraft, even if the prices are higher. This is not about buying aircraft 20% cheaper than everybody else. Yes, I'm sure they're getting a discount for their scale, but this is more about being concerned about the undersupply of aircraft. And they want to make sure they can lock in that growth before other airlines take it. And in every meeting that we're having in Paris, as well as on a daily basis with our marketing team flying around the world, the one thing that we continue to hear from airlines is that aircraft are undersupplied. They need more planes. I'm sure everybody on the webinar has experienced full flights, high fares. Airlines want to provide more seats. The reality is they can't. At Castlelake, we manage just over 300 aircraft. We have 0 available for lease. Any aircraft we have coming off lease over the next few years, we're already in discussions with those airlines as they want to actually buy the aircraft back or extend the leases. And so what's happening right now is demand has come roaring back, and the OEMs are really struggling to deliver this new technology. The OEMs really pushed the boundaries in terms of the technological advances that they brought to the new technology assets in terms of fuel efficiency, range, etc. And when they did that, they created a great product, one that all the airlines want. They can save 20% on fuel. They can fly a lot further. They can fly narrow bodies, long haul. The challenge is by pushing those boundaries, they've created quite a bit of a technological issue in terms of the engines aren't staying on wing long enough. And the engines are coming off wing after a few thousand flights when they were supposed to remain on wing for 15,000 flights. And so the engine issues are going to take years to sort out. At the same time, this pandemic created a lot of supply chain issues. The OEMs on the airframe side have over 3,000 underlying suppliers, extremely complex supply chains. And so they're running into some issues ramping up those supply chains to deliver more aircraft. And when they do deliver an aircraft, the engines are coming off wing far too soon. And so then there's not enough engines to supply new aircraft. And so the industry is really struggling to keep up with the demand right now. And I think that is the one thing that we continue to hear from the airline customers, and exactly why you see Indigo and Ryanair out securing aircraft. You asked when those deliver. Indigo's first delivery from that 500 aircraft order, I believe, is in 2030. And so they're already looking out that far because Airbus is sold out until 2030. And so this is a duopoly. You have stable demand. Supply of aircraft is controlled by only 2 OEMs on the airframe side. Wildly different than any other asset class that we traffic in at Castlelake.
Yet,
Go ahead.
No, I was going to say that wasn't a lot of order book canceled during the pandemic as well, or this has not happened?
It's very, very, very difficult to cancel an order book. What happened was the airlines worked closely with the OEMs to delay deliveries and defer deliveries. And when you do that, the price goes higher. And what that has created is a backlog of demand as demand is now back. And those airlines want aircraft, and the OEMs, very hard for them to slow down those supply chains from 45 aircraft a month at Airbus. They brought it down into the 20s. And now to ramp up that supply chain again is challenging.
So net, you mentioned, there's a lot of data in this industry. So when you look at the demand, you look at the supply, how much do you see in the order book that is today? How much do you see a net shortage of planes between now and 2030? Is that kind of a fair statistic?
Yeah, we've run this exact analysis in detail at Castlelake, and it's pretty nuanced. But in summary, we believe there will be a shortage of 4,500 aircraft between now and 2030, and that's due to a few things. Heading into the pandemic, the global fleet was older than it had ever been. From 2010 to 2020, aviation experienced a super cycle. Airlines were generating record profits, and the revenue environment was really favorable. Warren Buffett was out buying airline stocks for the first time ever. Everything was great, and things were never going to turn for the worse again. And because that revenue environment was so favorable, airlines were holding on to aircraft much longer than planned, as they didn't want to give up their capacity. And the OEMs were already struggling to deliver the new technology. You had the MAX crashes. On the Airbus side, you had some engine issues in 2018 and 2019. And so the fleet was really old. The pandemic hit. Obviously, everything changed due to that. Airlines looked at their fleets. They realized they were flying far too many different aircraft types. They had far too many old aircraft that were expensive to maintain. When revenue is great, it's easy to maintain those aircraft with all the cash coming in. When revenue isn't there and it costs a lot of money just to keep those aircraft flying, it's easy to park them in the desert and leave them there forever. And so that's what we saw through the pandemic. We believe more aircraft will be retired as a result of that pandemic than we've ever seen. Perhaps 10% of the fleet will be lost due to retirements. On top of that, the OEMs shrunk supply. Compared to 2018 run rates, the OEMs have already undersupplied by 2,500 aircraft. That's another 10% of the fleet. So in effect, the fleet is down, net of what should have been typical attrition. It's down about 10 to 15% in total. And now the OEMs are struggling to ramp up supply going forward. And so the fleet's a lot smaller today. And between now and 2030, that deficit is going to grow. It's going to grow to 4,500 aircraft. Again, it's a 25,000 aircraft fleet today. That's a large deficit. In other industries, you would see new types of OEMs jump into the industry, as you've seen in the automobile industry, as you've seen in shipping. In other asset classes, there are low barriers to entry on the OEM side. It's easy for somebody else to step in and take advantage of that opportunity. In aviation, it doesn't exist. There's been a number of OEMs in China, in Russia, in Japan that have tried to create aircraft. Extremely challenging to do. These assets fly in the air. They don't just float in an ocean. And so that supply constraint is something that, as an aircraft investor, gives you a lot of confidence in the downside protection.
So if we were to summarize, demand is going to stay high, supply is going to be, there will be a shortage, prices of tickets are going to keep increasing. And at what price, at what level there is this demand inelasticity where people are saying, it's too much of a cost to fly from the US to Europe. I'm going to choose to, go around and do more domestic traveling. Is there like a certain tipping point at which there will be this kind of, price sensitivity of customers?
I wish I knew. I really don't know in terms of how much passengers will pay to fly. What's interesting and what I do know is that over the last 25 years, fares have come down considerably. Airfares have been experienced deflation over the last 25 years. If you go back 25 years, it was a lot more expensive to fly. And so airlines have found a way to drive down the cost of running an airline or a flight to allow for more people to fly, which is why you've seen that 1.5 times GDP growth at the passenger traffic level. And now that airfares are starting to inflate, it's a great question in terms of when do customers skip that annual vacation? When do corporates tighten their budget and say that people can't fly to every single conference? I'm not really sure. And that is much more of an airline equity story. What I do know is that demand for aircraft is there, and it will continue to be there. We believe throughout volatility, And if you can focus on doing business with the best airlines, the survivor airlines, what you see in any downturn, if there is a significant recession or pullback in the global economy to the point where people aren't willing to pay $1,000 for a 3 or 4 hour flight, what you see is that the weakest operators, the weakest airlines are the ones that disappear first. And in every region, there's a pecking order in terms of airline financial quality. And where we focus our investing is really in the top tier operators within each region. And what you see through downturns is the weaker airlines shrink and disappear, and the survivors get stronger. And again, our focus at Castlelake is underwriting supply and demand of aircraft, not underwriting airline profitability. That's a fool's errand and very hard to predict in terms of airline profitability.
Okay, but let's touch a bit on the airline profitability because there has been quite a lot of changes. And I remember, when we were discussing in COVID, you touched a lot on this point where you mentioned, there might be insolvency in this sector up to 1/3 of the operators. At the same time, the government threw money at this sector. I guess almost 160 billion was given. So one is, what happened to this money that was given? And two, has this insolvency risk got reduced tremendously because of this intervention and support that we have seen?
Yeah, so there's a lot that happened during the pandemic. I think the way to simplify it is that every single airline in the world needed to restructure its business. And they all did a nice job of bringing down costs, but they also needed to raise capital. And in many parts of the world, the governments jumped in. I think that's a great reminder of how important aviation is to every single economy in the world. You saw over $200 billion of government support. Aviation is a critical driver of global GDP. And if an airline didn't receive government support, they either went through an in-court restructuring or an out-of-court restructuring. Very, very, very few airlines that didn't receive government support were able to just make it on their own without dramatically restructuring their business. And we're continuing to see pressure on airlines today that potentially didn't receive government support or that have to pay that government support back. Many of the largest airlines have paid it back. In Europe, we're continuing to see airlines raise capital to pay it back. They are generating significant profits today. But there's winners and losers. And we saw through the pandemic, a lot of airlines that weren't running great businesses for a long time, and they lost. And their equity values got wiped out. The shareholders and unsecured investors, in many cases, were wiped out or received 5 cents on the dollar. And in those situations, as a secured creditor at Castlelake, that's where our team really steps up and makes sure that we can protect our assets. And there were many examples of our team stepping into these situations. We had a lot of different exposures to airlines that needed to restructure that didn't receive government bailouts. And that's really where, number one, your purchase price matters. We wanted to make sure that we owned aircraft at the right cost. We wanted to make sure we owned the right aircraft. And we had the right team to back it up. And through this industry, the most important thing is creating high quality assets at discounted prices and having a big team to step in when the volatility strikes. That's what we focus on every day. The volatility did hit hard in the pandemic, and we owned the right assets at good prices, and our team stepped in and we were able to move some aircraft around the world. And in other situations, we were able to push back against the airline and tell them, we're happy to take the plane back. We think it's better if it stays here. We want to have a great partnership with you, but we're not just going to leave it here at any terms. We're more than comfortable repossessing and moving aircraft. And the fact that these are mobile assets, it's not like a commercial real estate building, which is obviously under pressure today. In commercial real estate, if you own a building in the wrong neighborhood at the wrong price, it's very hard to reposition that asset. You can't airlift a commercial real estate building to another city or another part of the world. In aviation, we moved 29 aircraft in the middle of the pandemic from Indonesia to the United States because demand was recovering much quicker in the US and Europe than it was in Southeast Asia. And we were able to protect our investors' capital by moving those assets.
Interesting. Okay, let's talk about the financing side. So maybe you can walk us through the evolution of financing market from what it traditionally has been and the various stages of the financing environment for aircrafts.
Yeah, absolutely. It's effectively, this is a $2 trillion asset class. Aviation is a $2 trillion asset class. There's about $1 trillion of aircraft flying around the world, 25,000 planes, and another $1 trillion of other assets, including slots, gates, and routes, airports, MROs, spare engines, spare parts, loyalty programs. We focus most of our time on the aircraft side of that equation, although more recently we've seen some really interesting opportunities in loyalty program financings, other airline secured financings. And this industry, because it is so asset intensive, it requires $200 billion of capital every single year just to run its normal course. There's over $100 billion of aircraft delivered every year, $30 billion of secondary trading, and then another $70 billion of other new issue financings and refinancings. And historically, 2/3 of that capital came from banks and capital markets. The banks and the capital markets really dominated the aviation financing industry. And what we've seen over the last few years, which is similar to what's happened in other asset classes over a much longer period of time, is that banks have started to retrench due to Basel IV in Europe, due to some losses that they incurred during the pandemic, due to shrinking balance sheets, due to the loss of specific talent within those banks going more so to the investor side. We've seen bank lending capacity in aviation decline by 30 to 40% by our own estimates. Capital market activity in aviation last year was down 90%. And so this very capital intensive industry that is levered, it's a levered asset class. There's a lot of those traditional leverage providers that are no longer present for the airlines and the leasing companies and even the OEMs. And so what that creates is a challenge in terms of how do you finance your purchases, and also an opportunity for us in that we've been doing this a long time. We've differentiated ourselves and prided ourselves on really being an innovator in aircraft financing. And in 2021, when the securitization markets, which was a primary driver of used aircraft trading and financing, is a $30 billion market. The ABS market shut down. We pivoted and we created a recourse corporate vehicle for aircraft leasing. Castlelake Aviation Limited today is on its way to being one of the largest aircraft leasing companies in the world. It has 100 aircraft today. It has over $4 billion of assets. And the benefit of having this structure is that we can issue recourse financing. We're no longer reliant upon banks. We're not reliant upon the ABS markets. We can use unsecured financing, term loan B, private placement, other secured financing from certain banks that look to the recourse as a differentiated risk profile than a non-recourse standalone financing. And so that Castlelake Aviation Limited vehicle is really a benefit to our own fund investors because we get preferred debt terms by having that recourse vehicle. And then there's also a big opportunity away from aircraft leasing in terms of where the banks and capital markets used to finance a bunch of different assets. Now we can step in and provide asset-backed direct lending or asset-based finance, which is really our focus as a firm. Our overall firm is really focused on providing private credit to hard assets and contractual cash flows. Similar to what you've seen over the last 15 years in terms of the rise of corporate direct lending, where that industry went from being very small to absolutely massive over 15 years. We're in the first inning of what we think is a super cycle in asset-based finance, effectively private credit for the asset markets. And Castlelake is a leading investor in the private asset markets. Aviation is our largest strategy. And that's really a focus of ours. When the banks pull back, we can step in and provide more unique, creative sources of capital and really provide interesting risk return for our investors.
Okay, you think the banks retrenching is not a cyclical thing, it's quite secular, that we're going to see them less and less involved in this sector, which is going to bring people like you and private investor refilling that gap. The question is, how does this impact the airline operators? Because I think, I'm not sure, but I'm assuming that, quality operators will always find, the money. Maybe non-quality operators used to be able to securitize or find it easier than now when the banks are retrenching, the capital market is retrenching, and there are smaller players that are willing to give to less quality. Do you think this could impact a bit the industry from a volatility perspective, or everybody will find at the right price?
They definitely need to get more creative. Things are definitely not as easy as they were a few years ago, where banks were open for business with everybody and the capital markets were wide open. The pandemic created a new risk. It created a new risk that for some means that they're not going to invest. And that's great for us because it creates more opportunity. Now for the airlines and other leasing companies that might not have that approach, that track record, that credibility, that brand name, it creates more of a challenge. They need to get more creative. There's definitely more of a division now between the haves and have-nots. And I think what you're going to continue to see is more consolidation, both at the airline level and even more so at the leasing company level. We've seen a lot of consolidation in the last few years. We're seeing significant M&A opportunities today with other leasing companies. In 2018 and 2019, there were over 50 leasing company startups. I don't know how many of them survived. Most of them, I believe, no longer have access to capital and will be looking to sell their assets to a larger player. So we're going to see significant consolidation on the leasing company side. And so that separation between the haves and have-nots, I think through that pandemic, it really helped everyone understand and reminded everybody who you want to invest with and who might have been in it more for the short-term super cycle in aviation and forgot that it's a cyclical asset class and you need to really build a lot of infrastructure around it. And at Castlelake, the way we position ourselves is we want to be a preferred capital provider. They can be there for airlines and leasing companies through any macro. We can provide senior secured financing. We can provide an insurance wrap senior secured financing. We can provide financing on non-aircraft collateral, including slots, gates, and routes, loyalty programs, etc. We can buy midlife aircraft. We can do a new aircraft. Our ability to show up and provide capital in 5 different ways is very unique in the industry. And that leads to a differentiated conversation with airlines and leasing companies. Airlines in particular are looking for that creative, custom tailored solution where they can really solve complex problems that were created by the pandemic. And those problems aren't going away right now. They weren't, they're going to continue for the next 3 to 4 years, I believe. Many of these businesses created a lot of leverage. They have government shareholders. They have other unique issues that they need to work through. And so our ability to show up with that custom tailored financing is resonating with a lot of airlines today.
Can you give us an example of, let's say, if you were to do a direct lending today, what does it mean in terms of base rate plus margin plus fees, and how does it compare to, let's say, retrenchment of the banks, or maybe because people, we know how it works in the direct lending side. We can follow this. How does it work for in your sector?
Yeah, unfortunately, I can't discuss specific returns in this forum. But what I would say is that
maybe talk about it as a spread widening relative to pre-4.
Yeah, I think the way to look at it is in this asset class, we believe you can generate a significant premium to any relative rating metric or more liquid security And the risk profile in aviation, while the headlines are volatile, while you hear about airlines making money and losing money, and oil prices going up and down and passenger traffic moving around, we actually believe, and we have the data to back it up in terms of our track record, that the risk profile in this industry, if you invest with the right firm, the risk profile is pretty compelling. There's a lot of downside protection. And so we believe on a risk adjusted basis that the returns are even more attractive. This is similar to other infrastructure asset classes, but with a premium return, given how hands-on it is, and given that it isn't as straightforward as just owning a 20-year contractual cash flow with a government-backed credit at a power plant or an airport or something like that. And so we believe this has the same sort of downside protection as many of those assets, but has more compelling return.
Okay, I forgot to mention that we have a question in the bottom. Anyone can ask any question you'd like for Joe. I have my questions prepared, so I can keep going, but you have the opportunity also to ask any question you like. So give us your, what does a high interest rate environment mean for the sector?
Yeah, absolutely. Given that these assets are levered, it's really important to match your asset exposure in terms of primarily your contractual lease term with your liability. And at Castlelake, we make sure that we match assets and liabilities through term funding and interest rate hedging to make sure that you're not taking interest rate risk on assets you already own. If you don't do that and interest rates just went up 500 basis points, you're in a lot of trouble. That move has been dramatic. And for assets that are on 10-year leases without inflation adjusters, this move in interest rates would have been very painful. And I think what it means on a go-forward basis in terms of asset values, it's one of the inputs. It's an important input. And that said, there's probably another 10 inputs that also matter in terms of aircraft lease rates, in terms of residual values. What we're seeing in terms of lease rates today is they're up, depending on the asset type, 20 to 30% compared to pre-pandemic levels. In terms of residual values, when interest rates are high, it typically means that inflation is high. And these are inflationary assets, both for new aircraft, where we're seeing OEMs increase prices significantly. That's a duopoly, two public companies, significant cost increases within Boeing and Airbus. They need to maintain margins. They are rapidly increasing prices for new aircraft, and they can do it because it's a duopoly. And in every new aircraft order contract, there's inflation adjusters. In terms of residual values for aircraft, what you see is 80% of the value in the engines. 80% of an aircraft's value is in the engines at its end of life. And about 90% of the value of an engine is in 20 single parts. Those parts only last on wing for 15 to 20,000 flights. So they're life limited parts. And the OEMs provide new parts to that market. And effectively that new part market trades almost in 100% unison or correlation with the used part market. And that market inflated 13% last year. And so you're seeing a lot of inflation in these assets. And so you need to make some assumptions around inflation, lease rates, interest rates. And I think the important thing
about oil prices, because that's a question about the input costs, like oil prices.
Within your airline credit analysis, absolutely. You want to make sure the airline can pay back the contractual cash flows that they owe you. Most of the time, the contractual cash flows exceed our purchase price. And so contractual cash flows is a big driver of return. You want to make sure that airline can perform. And that really goes into the airline credit analysis, not as much into the aircraft value analysis.
Got it. So we got a few questions. Let's try to answer them. How do airline balance sheet differ between US and Europe? And do you see consolidation in this business, which you said you will, but do you see more in US or Europe, and why?
Yeah, that's a great question. Did you say balance sheet at the beginning of that?
Yeah, how do airlines balance sheet differ between the US and Europe? I think the quality of the balance sheet.
Yeah, in the US, the market consolidated a lot more over the last 10 years. You now effectively have four majors and then a bunch of low-cost carriers, and everybody's doing pretty well right now. In Europe, it's still very diversified, and you're going to see a lot more consolidation going forward. And I think the low-cost carriers are still finding a way to take market share from the majors. In Europe, the loyalty programs aren't nearly as significant in Europe as they are in the US, which provides significant barriers to competition to those four majors. And so I think in Europe, it's a slightly higher risk than in the US, and you want to make sure that you underwrite continued growth of those low-cost carriers, because they are very ambitious, extremely competitive. And I think Europe is a little bit more fragile in terms of the future of the airlines, and you should see a lot more consolidation.
Got it. I'm conscious of time, but let's keep going. We have a few questions, and I want to really put it into a portfolio construction context for you guys. But there is a question on the outlook for the ABS new issuance market. And do you think that the public market will be attractive again for issuers, or the trend of private financing will continue?
Yeah, as of right now, the ABS market is closed. It's too expensive. The terms, in addition to just the pure interest rate, have become very penalizing, and it doesn't make any sense. The contractual cash flows aren't enough to actually pay back that debt on a monthly basis. So you'll need interest rates to come down a lot, and you'll need lease rate factors go a lot higher for that ABS market to make sense. So that is exactly where the private asset markets are really taking advantage and driving compelling financing terms, both for the investor as well as from the borrower.
Okay, on the supply side, how do climate change affect the supply side of airplanes?
Yeah, it's interesting. Every airline wants the new technology. Every airline and leasing company is absolutely focused on trying to reduce the carbon footprint of this industry. The reality is there's not enough aircraft. There's not enough new technology assets. There are not enough older technology assets. And so for the next 10 years, it's not going to really matter. Is airlines just want aircraft, period. And there's such a shortage, 4,500 aircraft. There's such a shortage that I don't think there's going to be a major point of differentiation anytime soon. Longer term, obviously, this industry has a lot of work ahead of itself in terms of really building up the stockpiles and production capabilities around SAF, sustainable aviation fuel. That's going to take a long time, but I think the industry is very focused on achieving net neutral by 2050.
Speaking about shortage, there's a lot of shortage also supporting this industry, right? Like a lot of people left this industry and never came back, and we're experiencing it, right? We're experiencing it at the airports. So it's not a great experience today to fly, yet you have to pay a high price and fly. Is there anything that's going to change to make it better?
I agree. It's painful. It's not satisfying, but we all keep doing it. And so far, fares haven't come down, and passenger traffic continues to increase. People love to travel. That's what people save up for. They want to go and connect with others. That is one way to get away from your normal way of life and to create memories. And I think the last 12 months have reminded everybody how important that is, after many years where you couldn't do that, to go out and reconnect and travel and see the world. So hopefully the airlines can figure it out, and the airports can figure it out, and the governments can figure it out. I'm not really sure, but so far I don't think it's had a significant impact on supply and demand.
Okay, so let's wrap up with portfolio construction. Like how do you guys, and what do you invest to start as Castlelake on the aviation sector? And also, how do you think of portfolio construction when you consider everything we discussed before in today's environment?
Yeah, so our approach, again, is we want to create a really wide funnel. we have a wider funnel than anybody else in aviation. We can provide capital up and down the stack, from senior secured all the way down to aircraft ownership equity, and across all asset types, from new aircraft to midlife aircraft, to loyalty programs, slots, gates and routes, spare parts and engines, et cetera. We want to create that wide funnel in this $200 billion a year industry, because that is how you can find the 5 or 7% of the transactions that you actually want to do. In any given year in our history, we have never won more than 7% of every deal that we bid on. And so when we bid, we lose 93% of the time, because we have such a wide funnel and because our underwriting is so conservative, really grounded in that 18 years of data. This industry is volatile. You need to be careful. You need to make sure that you're not overpaying for assets. There could be volatility that comes in 6 or 12 months. And when that volatility strikes, you want to make sure that it was in your base case underwriting and you own the right assets at discounted prices that you can move around the world if you have to. And so our portfolio approach is wide funnel. We want to look at everything. We want to underwrite anything from senior secured all the way to the bottom of the stack. And it really comes down to having 32 underwriting factors, having a very strict underwriting process, investment committee process, and our ability to have that wide funnel with a very low hit rate has resulted in us being able to continue to grow our business and continue to attract more investors. And so that is really the portfolio approach. We want to look at everything. Risk tolerance is very low, and we want to generate compelling returns. And so the way to do that, again, is by looking at a lot of different things. If you just focus on one small part of this industry, you're bound to make mistakes, because then your underlying team has more pressure on them when a transaction comes along that fits that narrow focus. They need to have a higher hit rate. They can't lose 93% of the time if you have a narrow focus.
Got it. What worries you today?
The global economy is concerning, and it's unclear how it's going to play out. You need to assume that it's going to get worse. You need to assume that people aren't going to spend as much to travel over the next few years. Oil prices are always a concern. I have no way of predicting which way those are going to go. The good news is that oil prices and the global economy are typically somewhat correlated. And so if passenger traffic pulls down, oil should come down with it. That said, it's a volatile industry, and you need to make sure that you're comfortable wearing that volatility. And if you aren't worrying when you're investing in aviation or really any asset class, you're bound to make a mistake. And so you need to make sure in every transaction that you're worried about what could go wrong and that you're building that into the underwriting. And we think we can do that in aviation, given that we underwrite so much, and that we have a lot of data in terms of how these assets perform through that different, market environment.
Do you see major innovation happening in this sector? I mean, you've been in it for the last 20 years. Do you see like a lot of disruption is coming, or it's just at the margin, this innovation happening?
On the OEM side, absolutely. And on the sustainable aviation fuel side, absolutely. I think that is where all of the innovation is focused today, in terms of how can we continue to provide a product that people desperately want, but to do it without creating a whole lot of carbon emissions. That is where the innovation is focused today. I think on the financing side, there's one really interesting product that we've been involved in lately, where we're effectively providing a reinsurance wrap on aircraft financings. That's a really important innovation to really help replace a lot of that bank capacity now with an insurance wrap product to continue to provide airlines with a low cost of capital. We'll continue to innovate in this sector ourselves, but I think a lot of the focus now is really on how do we bring down the carbon emissions for this industry and continue to do it with a relatively attractive cost of capital. If the cost of capital goes up too much for airlines, that's going to make its way through to passenger traffic, which is going to hurt everybody. So yeah, I think that's where we're focused.
Got it. Okay, Joe, I usually try to keep it at 45 minutes, and today we exceeded it. I said it's going to be fun. So thank you so much for joining us from Paris. I wish you have a great air show event, and I look forward to speaking with you shortly after you come back.
Thank you so much. And thanks everybody for listening. Hope it was interesting. Thank you.
Thanks. Thanks, everyone. Bye-bye now.
Bye-bye.